Starting with the crude prices, where the Brent is holding above 106 today as investors continue to eye the ongoing developments between Russia and the West. Remember, the pro-Russian separatists downed a Malaysian airline passenger plane last week, triggering a massive international outrage. On your screens, 0.25% down on both the crude prices. The geopolitical concerns have given a boost to the prices of gold as investors seek safe haven. So nearly 1% of gain coming in for the gold MCX prices, while silver also has seen a jump up. Let's also get on board then Vijay Bambani, who's author and CEO at BSPL India. Also joining us is Tarun Satsangi, who's head commodity and currencies at Globe Commodities. Vijay, to you first. And while the previous week has been good for energy, this week really has opened slightly on a weaker note.
Good evening, Manisha. I would still remain circumspect on energy. As a matter of fact, natural gas is likely to lead the way down, followed closely by crude. I think the 6,225 level on MCX crude prompt month futures is a level to watch out for. If at all MCX crude does not manage to go above that and stay above that, I think a very short-term top would be formed, and sub 6160 levels may just be seen in the next 1 or 2 trading sessions. So I would seek short selling opportunities on energy, and I would remain bearish here.
Tarun, how would you look at the energy space, and what's your sense now on the prices going forward?
I think so far as natural gas is concerned, we are still having bearish view in the natural gas despite 20% correction in last 1 month. We are expecting it to test close to $3.2 in the NYMEX, and domestically 210, 215 would be the level. I think now concern is easing. I think at the pace at which supply in the US are rising, that is easing the concern of sufficient stock level at the start of peak demand season in the US, which starts from November and normally ends in of late March. So altogether we expect, I think before start of peak demand season, storage would be 3.5 TCF in the US, which will be enough to meet the winter demand. So altogether it's looking all the way down. In case of energy, short term, in case of crude oil, it is looking short term in range of $98 to $105, talking of WTI crude. But we believe once the geopolitical tension will recede, supply side will play a toll on the prices, and once again we will see correction coming in.
Vijay, how do you look at the precious metal space? Because while the first half of previous week was strong, by the end of it we saw 2% of decline coming in for the gold prices. Very steady right now, perhaps seem to be looking at further cues, direction to move on from here. How would you want to trade?
Manisha, precious metals have perked up a little bit, and this has more to do with what's happened in Ukraine and a cumulative impact of Iraq, which has also triggered some amount of safe haven buying. Now, having said that, I think the sustainability at high levels remains a question mark. If at all I was to take any positions, I would not take it in the forward segment, and I would be positively biased towards silver as relatively compared to gold. Since the last 17 months odd, I've been advocating nibbling into deliveries rather than taking futures position in silver. I would like to resume those delivery-based levels of buying all over again. If I get 44,500 to 44,800 levels on silver, I don't really mind picking up some deliveries here. But in the future space, I'm a little circumspect because 46,400 remains a near-term resistance for silver. As far as gold is concerned, the 28,600 remains a fairly stiff resistance for the bulls to overcome.
Fair point that. Let's take a look at the base metal prices, because there has been some profit taking on to that one as we started Asia in the new week today. Tarun, how are you looking at something like a nickel or zinc or copper for that matter? Because most of these metals have seen an increase in LME inventories.
We want to play bearish in most of base metals. Copper and nickel are looking bearish for short term. Copper can be sold close to current market price, which is around 428 to 430, keeping the stop loss above 435.50. We expect it to decline towards 415 once again. Nickel is the second commodity in which I think shorting can be played on rise to 1135, 1140, keeping the stop loss above 1155. Again, we are looking for 1090 as a downside target. Those zinc, aluminum, and nickel are lead are looking a bit higher, but I think of late they will resume a trend of copper, and in short term they may also fall by 2 to 3% before their tight supply in case of zinc or nickel once again start playing for medium term better performance.
Talk about the agro commodities then, and there is some support that we have seen continuing in case of the edible oil space. Remember, the sowing numbers have been quite weak in India this time around because of the weaker monsoon. Vijay, how would you look at the edible oil space overall?
Manisha, I would remain a buyer on declines, as I talked about even last week, because if at all El Nino is to hit Southeast Asia, the Borneo area, which is the hotbed of the crude palm oil production, will basically see some amount of volatility with an upward bias. So where the July futures contract of CPO are concerned, trading at 534 odd levels, if I was to see 3 to 3.5% decline from here, I would be a keen buyer. Where soya oil is concerned, today it's ended the 20th August futures at 684. If I was to get soya oil around 675 to 677 band, I would be a keen buyer here also. So I would follow a buy on dip strategy on edible oils.
Tarun, what's your sense when it comes to castor and soybean? How would you want to play them?
Soybean looking firm for short term because of tight supply and laggard sowing progress, altogether supporting the upside rally. We expect prices to rise towards 39.50 in the coming days. This counter can be bought around 37.70 for those targets. Castor seed, because of weak export demand, it is looking still weak, and secondly, sowing progress is up to the level of as it was last year. So altogether, we expect the way it has lost around 6% in last 2 weeks, that phenomena will continue for coming 2 to 3 days as well. It may slide to 4,050 in the near term.